I want you to think about the last time you went grocery shopping. You pushed your cart through the aisles. You picked up the things your family needed: bread, milk, eggs, maybe some meat. You got to the checkout line, and when the total came up on the screen, you felt it. That quiet, familiar pressure in your chest. The one that has been getting heavier every single month. Because groceries are not cheap anymore. Prices are up 29% since 2020. And now, for the first time in American history, a significant and growing number of people are doing something that would have seemed unthinkable just a few years ago. They are financing their groceries. They are using buy now, pay later loans to buy food. And today I am going to tell you exactly what that means, not just for the people doing it, but for every single American who is watching the economy right now and wondering what is actually happening. Here are the numbers. According to a LendingTree survey conducted in April 2026 of 2,000 Americans aged 18 to 79, 29% of buy now, pay later users said they have used BNPL loans to buy groceries. That is up from 14% just 2 years ago. It has more than doubled in 24 months. Among Gen Z users, specifically people aged 18 to 29, the share rises to 38%. Nearly 4 in 10 young Americans who use buy now, pay later are now using it to buy food. And it does not stop at groceries. 13% of BNPL users said they have used it to pay rent. 15% have used it for medical, dental, or veterinary bills. 54% of BNPL users said they would not be able to make ends meet without these loans. More than half. These are not people financing a new television or a vacation. These are people financing survival. And the late payment data tells you exactly how stressed that is making them. 41% of BNPL users made a late payment in the past year, up from 34% the year before. That is the second straight year of rising late payments. The trend is not reversing. It is accelerating. Now let me explain what buy now, pay later actually is, because the way it is marketed and the way it actually works are two very different things. The pitch is simple and appealing. Split your purchase into 4 easy payments. No interest, no credit check. Just tap and walk out. For a long time, that model worked reasonably well for discretionary purchases: a new pair of shoes, a piece of furniture, an electronic gadget. You buy something you want, you spread the cost over a few weeks, and if you budget reasonably, you pay it off without issue. But here is the fundamental problem with using that model for groceries. Groceries are not a one-time purchase. You need them again in a week, and then again the week after. Which means if you are using BNPL to buy groceries today, you are likely still paying off last week's groceries when you need to buy this week's groceries. And you are still paying off both of those when next week arrives. The debt does not go away. It stacks. And then the late fees arrive. Late payment fees on some BNPL services can run $7 to $8 per payment. And interest plus financing fees on some products can reach up to 36% annually. The executive director of Protect Borrowers, a consumer advocacy organization, put it bluntly: when late fees stack on top of each other, it is the equivalent of an interest rate of 100% APR or more. You started by trying to afford groceries. You ended up in a product that functions like a payday loan. Here is the broader context that makes this story even more alarming. BNPL loan originations from major lenders surged from approximately $3 billion in 2019 to more than $45 billion in recent years, according to the Consumer Financial Protection Bureau. 50% of American adults have now used at least one BNPL service. 60% of BNPL users hold multiple loans at the same time. In 2026 alone, interest-bearing installment loans account for over 37% of annual BNPL loan issuance, nearly double the share from just 5 years ago. What began as a checkout convenience for sneakers and sofas has now threaded its way into grocery aisles, utility bills, rent payments, and medical care. And the people most likely to be using it for essentials are precisely the people who can least afford for something to go wrong. The CFPB found that BNPL users tend to have riskier credit profiles and often carry multiple loans simultaneously, raising concerns about cascading exposure. If one payment slips, then I want to stop here and just say something plainly, because I think a lot of financial content treats this subject the wrong way. Using buy now, pay later to buy groceries is not a sign of poor financial discipline. It is a sign of an economy that is squeezing ordinary people to a breaking point. Prices are up 29% since 2020. The Federal Reserve kept interest rates at the highest levels in decades for years. Credit card rates are averaging over 20%. Rent has surged. Wages for most Americans have not kept up. Matt Schultz, the chief consumer finance analyst at LendingTree, said it directly in his coverage of this data. A lot of people are struggling and looking for ways to extend their budget. Inflation is still a problem. Interest rates are still really high. There is a lot of uncertainty around tariffs and other economic issues. And it is all going to add up to a lot of people looking for ways to extend their budget however they can. The people buying groceries on BNPL are not making bad decisions because they lack financial literacy. They are making the only decision available to them in a system that has made basic survival increasingly expensive. Now here is what this data actually signals for the broader American economy and why it matters even if you have never touched a BNPL product in your life. Consumer spending accounts for approximately 70% of American GDP. When consumers are financially stressed when they are borrowing money to buy groceries, it tells you something important about the underlying health of household finances in this country. Credit card balances fell slightly in the first quarter of 2026 by $25 billion, which on the surface sounds like good news. But total household debt still rose to a record $18.8 trillion, driven by mortgage, auto, and home equity balances. Credit card delinquency rates ticked down only modestly from 8.7 to 8.6%, still near historic highs. The picture that emerges when you put all of this together is of an economy where the surface looks stable but the foundation is under increasing strain. People are not spending freely. They are stretching every dollar they have, and when those dollars run out, they are borrowing to buy food. There is one more dimension to this story that I think deserves serious attention. The buy now, pay later industry operates largely outside the regulatory framework that governs credit cards and traditional loans. There is no standardized way these products report to credit bureaus. There is no consistent federal requirement for how they disclose interest and fees. There is no uniform definition of what constitutes a default. Federal lawmakers are currently weighing how to regulate BNPL, but as of right now, millions of Americans are taking on debt through products that carry fewer consumer protections than any other major financial instrument in the market. Which means if you miss a payment, the consequences can be less predictable and potentially more severe than missing a credit card payment. And if BNPL companies begin to face rising defaults at scale, which the late payment data suggests is already beginning to happen, the downstream effects on the broader consumer finance system are genuinely unknown. We have never been here before at this scale. So what should you actually do if you're using BNPL right now or considering it? Here is honest, practical guidance. First, if you are using BNPL for discretionary purchases and paying it off on time with no issues, the risk to you is manageable. But treat every BNPL plan like a real loan because it is one. Track every due date. Limit how many plans you have open simultaneously. Never finance more than you can comfortably repay. Second, if you are using BNPL for groceries or other essentials, this is a signal worth paying serious attention to. Not because you are doing something wrong, but because it means your monthly budget has a structural gap that BNPL is temporarily filling. And filling a structural gap with short-term debt that carries late fees and potential interest only widens the gap over time. The most effective thing you can do in this situation is find one recurring expense to cut, even temporarily, to create some breathing room. A streaming subscription, a gym membership you are not using, one eating out habit. Anything that frees up even $50 a month creates a buffer that reduces the need for BNPL for basics. Third, if you have missed BNPL payments, call the lender immediately. A LendingTree survey from June 2026 found that BNPL lenders are highly likely to waive a late fee if borrowers simply ask. Most people do not know this. One phone call can save you money you cannot afford to lose. The story of Americans financing their groceries with buy now, pay later loans is not really a story about a financial product. It is a story about what is happening to ordinary people in this economy right now. 29% of BNPL users buying groceries on installment plans. 54% saying they cannot make ends meet without it. 41% making late payments. Prices up 29% since 2020. These numbers do not describe a few people making poor choices. They describe millions of households doing the best they can with what they have in an economy that has made the basics of life increasingly difficult to afford. Understanding what is happening is the first step toward navigating it. And whatever your situation right now, knowing that this pressure is real, that it is widespread, and that it is not a personal failing that matters. The system is under stress. And the people feeling that stress the most deserve honest information about what is actually going on.